Hi guys, welcome to CA Inter Financial Management MCQs. I'm CA Nojalota. We are here to be doing every possible question from financial management of CA Inter. Every question has something new to be learning. Every question has some logic. Okay, that's what we are here for you all. On every Saturday, Sunday, we come out with complete lectures of CA Inter costing. Do check them out. Enough for you all to be getting 90 plus in costing quite easily. Secondly, all the MCQs of costing are already there on our YouTube channel. Let's start it off with today's question. It's dividend decisions. But today I'll try to be linking dividend decisions with your accounts also in some way. Let's see the question here. So the question for today is, what are the different options other than cash used for distributing profits to the equity shareholders? Company has earned past profits in life. It wants to be giving them back to the shareholders. How does it do that? What are the options? Okay, bonus shares. Second, stock split. Third, both A and B. And D, none of these. Okay, so in case you all know the answer, even if you're good in accounts, you should be able to answer this. Try to comment the correct answer. Okay, now see. What is stock split? Now, stock split means, suppose company has current equity share. Every equity share has face value of say rupees 10. So, one share is having face value of 10. Company wants to increase the supply of shares in the stock market. So, therefore, people with lower budget can also buy the shares. It resorts to stock split. So instead of one share of rupees 10 each, it could be say 10 shares of rupee 1 each. I've put forward a certain example over here for you all. We had, or the company had issued equity share capital. We had 1000 shares of rupees 10 each. That amounted to 10,000. Under stock split, what we might do is that we want to be having more number of shares of the company floating in the stock exchange. So therefore, people can be buying it. Okay. So instead of having face value of rupees 10, same share we split it up into 10 parts. So therefore, now every share will become of rupee 1 each. And correspondingly, there will be 10,000 shares over here. So 1000 shares of 10 each becomes 10,000 shares of 1 each. Amount does remain same. Over here, profits are not affected. Your past profits are not affected at all. It's only that denomination will be changing. This is done, as I told, basically for increasing the supply of the shares in the market. Okay. Now, do remember, if you are actively trading in stock exchanges, then the day this will happen, okay, if something like this will happen, whatever number of shares you had, okay, automatically they will become 10 times and their prices will become 1/10. Okay, the day stock split will actually get executed. What will be the entry for stock split? It will be equity share capital debit. 1000 shares of 10 each, rupees 10,000. 2 equity share capital, again in this case, 10,000 shares of rupees 1 each, that is 10,000. Okay, so there is absolutely no mention of retained earnings over here. Retained earnings do not get affected. But then what about bonus issue? Bonus issue means company wants to tell the shareholders, we are giving you the past profits of the company. We are giving you past profits of the company. So therefore, if suppose company had issued 1000 shares of rupees 10 each, rupees 10,000, it tries to be thinking, we have past profits. Let's try to capitalize them and make them as a permanent ownership of the shareholders. So therefore, it might issue, in this case, rupees 5, suppose it wants to be giving 5,000 rupees as bonus, okay, to the shareholders from its retained earnings. Therefore, it will issue 500 bonus shares of rupees 10 each. So therefore, every person who had 2 shares will be getting 1 bonus share, because for 1000 shares, we are issuing 500 to bonus shares. So therefore, that ratio will be nothing but 2:1. Okay, now see. Whenever this thing is done, please do remember, we are capitalizing our past profits and we are giving it to the shareholders. So therefore, entry for bonus issue is going to be retained earnings account debit. to equity share capital. Obviously, that amount is going to be 5,000 over here. That is 500 shares at the rate of rupees 10. Now, just for your knowledge, whenever the bonus issue will be announced, to give you a small example, around in the month of October 2024, to be very honest, I guess 29th of October or 28th of October 2024, Reliance had given a bonus issue of 1:1. Now, the day bonus share will be given, please do remember, on that particular day, in the stock exchange, if suppose that ratio is 1:1, for every one share that you are holding, the company is going to be giving one share free of cost. On that day in the stock market, your prices will get adjusted. You will be getting 2 times the number of shares. Okay, if you had say 500 shares of Reliance, you will be getting say 1,000 shares. Okay, means 500 of the normal that you all have plus 500 of bonus. So therefore, you will in all have 1,000 shares and its market price will become half. But one thing that you will be observing in stock exchange, that whenever a company does a bonus issue, usually the market prices increases after the bonus issue. Sir, why? Because the shareholders are getting past profits also. So therefore, in this case, it is a way of capitalizing the past profits, and usually bonus does very good to the market price of the shares. Okay. So on that day, effect of stock split and bonus issue might be same. Okay. This you all should remember, you all should be knowing as such. Okay. But overall, in long run, bonus issue will always have a favorable impact on the market capitalization. Overall, shareholders become far more happy when they all get bonus shares as such. Okay, stock split is not way of capitalizing past profits. It's just way of dividing the current number of shares into smaller fragments. Okay, so therefore, the answer I'm trying to be having now. So therefore, what are the options? What are the different options other than cash used for distributing profits to the shareholders? So therefore, if you want to distribute profit to the shareholders, give them bonus issue beta. So answer should be A over here. That is the correct answer. That's it from my side. I'll see you next time in another question. Till then, take care guys. Bye.